I haven't looked at this in a while. I remember when my friend created SoFi. I was having dinner with him in San Fran, and he was like, I've been thinking about banks and like why banks don't have competition with, from tech companies and so forth. And about a year, this guy named 𝗏𝗏𝗏𝗏, a year or two later, SoFi was born. Pretty crazy, right? He got fired over some sexual harassment thing. So yeah, let's just take a quick look at the markets as well, since people are so panicked. Looks like some of the panic has subsided pretty substantially. Again, I would just ask you to do the thought experiment of, do you think that red line, black line thought experiment I gave you a minute ago that I drew on my stream, if you watched it, is a slow, larger decline scarier to you than a fast, smaller decline? Would you rather be down 25% slowly or 20% instantly? For a lot of people, that is a tough question. And the stocks that are down the most today are the ones that have kind of been up the most over the last year or 5 years. And if you notice, there's like a bunch of SaaS companies that normally carry very big multiples, like Veeva, CRM, Now, ServiceNow, all like the quintessential SaaS companies, even like Workday, they're not down very much today. And then the defensive stocks and like biopharma, some of them are not down at all, like Amgen or AbbVie or Bristol Myers or some of those companies. If you're really panicked, it says more about your portfolio than anything else. All right, let's do SoFi. I've never really looked at this company other than meeting the guy who started it before he started it and hearing him talk about potentially starting it. It's kind of not been a great company. It's sort of a disappointment. They raised a lot of capital and didn't create very much. It was a weird pitch too. It was like they really wanted to go after like 𝗕𝗢𝗙𝗢𝗢𝗓. It was like very odd. Like they were specifically targeting the market of like, I guess I'd rather look at the 10K when I'm first looking at a company than the 10Q. Just because I've really never looked at this company in my life. So this will be like noob experience. So you guys should be able to do this as well or better than me. So again, I look at the market cap is 6.4 billion. They have 977 million shares outstanding. $6.60 stock price, so almost 1 billion shares outstanding exactly. So pretty easy to calculate the market cap in your head. The cash is going to be weird because it's a bank. So financial stocks are a little weird. Let's take a look. Well, 10K usually has the financials like kind of at the end. So I'll start at the end. This is the like weird condensed balance sheet because of the parent. So let me go up a little bit to the real balance sheet. Oh, they have a bunch of crypto. It looks like that's really funny. They're holding it on behalf of their users, but that's funny. So maybe they've been leaning into crypto. I don't know. But they're supposed to be like the millennial bank. I think that was their like strat. But, at the end of the day, a bank's a bank, and every bank is kind of an online bank. Just because you have costly, kind of like the Amazon thing, like you have costly branches. So it's weird. You have to when you look at banks, you have to sort of think about the balance sheet a little bit differently than you normally look at non-banks, because you're holding a bunch of assets for the customer, and those you kind of can't mess with too much. You obviously make loans and stuff, but that's your business. But you have to have a very carefully managed book. So you can see they have 21 billion of loans and 18 billion of deposits. Deposits are your liabilities. It looks like they're a little levered. But again, in banks, it's not always as it appears. So I guess things you want to look for in SoFi, because it's not a traditional bank, it's a relatively new bank, I'd be looking for things more like tech-like metrics, like customers, balances, things like that. They have a huge amount of growth in their loan book. I hope that's a good thing. It's actually super impressive. I wonder where that came from. So they did 352 in loans in 2021, then 759 in 2022, and then almost 2 billion. So they doubled loans every year. Stock has been dog though. Not every loan is the loan you want to do. it's very rare to see revenue go through the roof like that. Very interesting. Yeah, so SoFi can kind of be a hidden gem here. Looks kind of exciting. I'm not a financials analyst though, so like I have to talk to some friends that actually do this for a living. Because like you can kind of look at any stock if you know stocks relatively well, but financials are a little weird, a little difficult. They're kind of an exception to that. Financials can be a bit of a quagmire if you don't know what you're doing. They have non-interest income as well. So they do originations for others. Oh, I see. Okay, this makes more sense to me. So their loan book is profitable, but they have other business as well. So originations, servicing. This is like a really intense company. I have to origination. Okay, so around 800 million in this like other business. But now we're going to deal with the costs of the company, which are massive. So cost of operations, I guess you call that G&A? That's so weird. They have a G&A line and an operating, like cost of operations line. I'd be very curious to ask their CFO what that means. Okay, so I guess that according to this, at least, they're break even, but given their sort of growth trajectory, you know, I would imagine they could be very profitable. But I'm still trying to understand the business model in the first place. The number of members they have, which is, like I said, probably one of the key things I would track. Looks like it's going up metronomically. I want to track that going back a few years, but that's unbelievable. Thank you so much for suggesting this. Who is that? Our little Godel community. Yeah, SoFi looks really, really interesting. It's odd because like I would imagine the financials guys kind of want to, like the bank analysts on Wall Street are very weird. And then the tech guys probably don't want to look at it because it's a bank. So it probably doesn't have, you know, the right analysts kind of looking at it, and that might reveal, you know, it to be undervalued.
You mentioned you had like a tool that's like an alternative to Bloomberg.
Yeah.
And I'm just curious, like, if somebody had that tool right in front of them, could they use it to like look up whether or not, I think for the Asana, you know, $ASAN stock, which is kind of like a SaaS.
Yeah, I know Asana. Dustin Moscovitz's company.
Yeah, did he buy like $1 billion of that stock back? Like,
yeah, he's been buying Asana for years.
Yeah, okay, because I couldn't find that.
Yeah, I mean, you could look on SEC.gov for that as well. But yeah, no, the Moskovitz has taken his Facebook fortune, given a bunch of it to this effective altruism cause to stop AI for whatever reason, which he has nothing to do with. And then,
which is weird because like his products had like a announcement that said, "Hey, we got some AI stuff coming out." You know, email.
Yeah.
The thing that was interesting is like I could have swore that news came out like a month and a half before, you know, like all the ChatGPT stuff came out.
No, I mean, he's been buying Asana for the last 5-6 years. He's made more money in Facebook than the entire market cap of Asana times 5. Like, the guy's got more money than God, but the Asana just kind of sucks.
Yeah, it just seems like in retrospect, like I would have, if I had just spent $1 billion on a stock and then Nvidia shoots up, I would have been like feeling some FOMO.
Yeah, I mean, when I saw him buying all that Asana stock, I was impressed myself. I was like, wow, if he's willing to buy a ton of Asana stock, then maybe I should too. And then it's like, well, I don't know what his like hunger is to make Asana really successful. I have no clue. You know, It sounds like he's living the billionaire life more than he is anything else.
Yeah, my questioner was actually originally going to just be just generically, like, what's your thoughts on like the long-term stock exchange that came out?
Oh yeah, that sounds really cool.
But there's like only 2 companies on it or something.
I imagine it's going to take a lot of time before,
yeah, okay.
Before they can get too many companies on there. But I think Citadel's behind it, amongst others. So there's enough sponsorship there. Man, this SoFi thing looks amazing.
Hey, thanks for taking my question.
Yeah, of course. Dude, this SoFi is, how much do I want to look at a bank stock? Like negative 100%? But like, this is incredible. Look at this, guys. This is the amount of users SoFi has, right? They call them members, I guess. Tell me, it's literally gone up every quarter. Isn't that interesting? Could be a really good buy. I appreciate you putting that on my radar, Henry. Now the book value is the problem, right? So bank stocks tend to trade on something called tangible book or book value. But in a lot of ways, like, you could argue this isn't a bank stock, but bank guys would argue, no, all bank stocks are bank stocks, and that's that. You got your book and that's it. And so most bank stocks trade at book value. They don't trade above book value. And right now, SoFi is trading above book value, but they also look like a tech stock in a lot of ways. This isn't somebody's asking me if I have a conspiracy theory about this crash. Well, I mean, that's about the stupidest question you can ask, because this isn't even a crash, one. And then two, I mean, Atlassian is up today. So if there's a crash, every stock would be down. But there's a bunch of stocks that are up today, so or down very little. So I wouldn't get too carried away. And no, there's no conspiracy theory. What do you want me to say? BlackRock is meeting with the Rothschilds or something like that. So yeah, SoFi is really interesting. I do think the whole like book value thing is pretty much the most important thing in a bank stock. So like, but if your users are doubling, maybe it doesn't really matter. The old way of like looking at bank stocks, because banks have a hard time growing their deposits, and they're typically like somewhat stagnant, and the loan performance matters more than the deposit growth. And like companies like Bank of America don't grow deposits very much because there's only so many branches you could open. Whereas like here, deposits are growing like 100% year over year, like several years in a row. Yeah, I don't really look at short interest too much unless it's like crazy high. I don't think short interest is that too crazy. And I wouldn't call this Black Monday. Let me take a couple more questions and I'm gonna go to work, go to my day job.